Hey, welcome to today's episode of the High With Us podcast. I'm your host, Daniel Martinez. Today we have a special guest, Mr. Malcolm Turner. What part of the country we speaking from today?
Michigan.
Michigan.
We're Michigan. Metropolitan Detroit. The Detroit Metro.
Metro Detroit. My wife has family in Michigan. I go out there every once in a while. My wife's actually grandfather is in prison. He lives in Coldwater. He's in Coldwater.
Oh, okay.
So I go that way not very often, but once every other year. I grew up outside Chicago, so I used to go up to that way a lot. I've only been to Detroit once, surprisingly.
Okay.
Once I got Coney dogs. My wife's from Detroit.
She must be a tough cookie.
Very, very tough. very, very tough cookie. No, I like Detroit. Detroit's a cool place. I think Michigan is very beautiful. It's a very beautiful state.
And because of the Great Lakes around us, both sides north of us, it's a very moderate climate. You know what I mean? So it used to get, when I was a kid, and I'm dating myself, I was born in 1967. Okay. In the 60s and 70s, it would be cold. I mean, it would be ridiculous. And we had the blizzard of 77 or the blizzard of 78 or 81. It was ridiculous. Now, climate change, it snows once in the 3 days, it's gone. And it gets a little cold, but it's not like it used to be, And we don't get tornadoes, we don't get wildfires, we don't get hurricanes, we don't get mudslides, we don't get any of that, that fun stuff that other states have to deal with, I'm
from Chicago, so we used to get the lake effect snow. It was ridiculous. But it's probably not as bad for you guys. But that's a whole other story. You're actually a real estate commercial lender. How long have you been doing that?
16 and a half years.
Wow. That's crazy.
16 and a half years. I started the company in 2007, in February of 2007. Awesome. So, I co-founded it with a partner of mine.
Awesome. We're going to jump right into it. With podcasting, I've kind of experienced, and I talked to a lot of people with different skill sets and different things. So one of the dopest things about being a podcast is I get to learn. So everybody here listening, you get to learn too. So this is the dope thing. So what type of assets class are you lending on? Let's start off there. And then are you only Michigan based? The second question.
This show is sponsored by HiveMind CRM. It is more than just a CRM. It is a real estate and business mastermind that comes with an all-in-one CRM. You can have unlimited websites and users. You can call, text, RVM, and email all in one user interface. And you can set up custom automations for any type and multiple businesses. 65% of companies start using a CRM system within the first 5 years of business. Once implemented, the HiveMind will save you on marketing, give you more time, and make more money. One of our users had his first $100,000 month using our system in June. We want to see you automate and accelerate your business. Text us at 210-972-1842 for future meetings, and of course to get our $1 course on how to make more than 6 figures on one land deal. You can schedule your free demo today at hivemindcrm.io.
Answer that first question. Second question is we do everywhere. So we do Florida, Texas, Ohio. We do most states. The only places we don't really lend is the places that no one lives. Wyoming, South Dakota, North Dakota, Alaska, that kind of thing. But if you're in a place with a population, like even Wyoming, like we'll do Cheyenne, Wyoming. Okay. Which is like the state capital. But outside of that,
I mentioned the population lives there,
Yeah. It's So everywhere people live, we'll go, we'll do. And then as far as asset class, we do most forms of commercial real estate. So we do multifamily, which is probably our biggest, busiest category.
Okay.
And then, multifamily is hot right now. Everybody wants to do it. But we also do office, we do retail, we do industrial, we do triple net lease deals, we do hotels. We don't do land so much, but we will do development. So if somebody just wants to get a loan just on land, period, that's not really our thing. Now if they're doing a development and they're trying to buy, like I'm working on a $20 million development right now. And they're, building homes that are anywhere on the low end, I think 224 and 380 on the high end, that kind of stuff we'll do.
RV parks?
RV parks, mobile home parks,
Okay. So
self-storage.
I got a live deal for you. So we're getting this is why everybody here. This is why we do this. Okay. So I have a deal in Louisiana. We've never bought anything in Louisiana. And it's a 10 cap underwriting. It's a 75K NOI, and we're looking to purchase it. Now, can somebody with the ability, like if it's already, it appraised for $1 million, so it's 250K in equity, could we get a loan to buy that immediately with equity? And what does that process look like? Because that's what I was thinking.
Well, you're saying that the value is $1 million?
Yeah, they just got it appraised for $1 million.
Okay, and then the purchase price is $750?
$750, yeah.
Okay. And so, well, I mean, you still have to put a down payment on whatever the purchase price is.
Okay. See, I didn't know that. Okay.
Yep. Now, there may, depending on how we structure the deal, there might be some things with that kind of equity in the deal. There might be some flexibility with closing costs and things like that, rolling that into the deal.
Yep.
Might be possible. It still just depends on how we structure it, because the one thing about commercial, right, Daniel, is that every deal is different. It's not like 100%. Residential where you just plug and play and it's an algorithm and it says, boom, here you are. Everything's what we call, when I used to do residential loans right before I started doing this, and everything was a manual underwrite. In residential, if you had a manual underwrite, you're like, oh my God, this is terrible. This deal's going to be hard. It's like, oh, you got to work on it. Oh, wow. That's all that meant. And in commercial, everything's a manual underwrite,
Yeah.
But commercial's fun because of the creativity that you can have in commercial, because you don't have all of these regulations piling on top of a deal. So it's like whatever you can negotiate with a seller, and you can negotiate with a lender on some things, there's a lot of flexibility. Of course, the golden rule applies, right? He who has the gold makes the rules. Okay. But that's the other golden rule, right? But there's a lot of flexibility in commercial.
So you have, and I did not know this. This is new. This is why I like doing stuff like this. So you have flexibility to. Oops, I did not mean to do that. We're gonna pop it right back in. All right. So you have flexibility to create partial seller financings, make the seller do a second position. You have a lot of creativity to make that loan work from start to finish just by working with creative terms, is what you're saying.
Correct. And then and with commercial lending, there's a lot of different types of lenders, right? Like most people think, okay, there's the banks. Okay. Right. Yeah. There's, Chase, Bank of America, whoever. Yeah. Then you got the community banks and credit unions, right? And then you got hard money. Okay. Right. And that's it. Right. And actually, no, there's a lot of different types of non-bank, what I call alternative commercial lenders out there. And it all comes down to how they're funded. Okay. So example, you take my firm for instance. Okay. My firm, we started out as a brokerage. We were strictly a commercial mortgage broker exclusively. We've never done residential. Okay. We've done, as I don't do home loans, HELOCs, none of that stuff. It's strictly commercial loans. Yeah. Okay. Now we'll do commercial loans on residential property, that's investment property, but not on primary residences. Right. But the commercial in 2019, a lender approached me and gave me a call and say, "Hey, is this Malcolm Turner with Castle Commercial Capital?" I'm like, "Yeah." It's like, our little research, whatever, says you're the president of the company. Is that still true? I'm like, "Oh yeah, I am." And they're like, "Okay, so do you have any paper you want to sell?"
Mm-hmm.
And I said, "No, we're a broker." And he's like, "Well, I searched commercial loans in Michigan, and you guys popped up on the first page of Google.
Yep.
So you must be doing something right over there." I'm like, "Yeah, we're doing okay, you know." And he's like, "Yeah." He's like, "Okay, so, but you're a broker?" I'm like, "Yeah." He's like, "Well, you want to be a lender? Because if you're doing enough volume, we'll buy your paper if you guys pass our vetting process or blah blah blah." And I was like, "Well, all right, let's talk about it." And we went, we got engaged, and it was a company that was doing $1 billion in commercial loans a year.
Wow.
And they were looking to buy paper,
Yep.
because it's all about cash flow and,
Yep.
playing the rate game and yield spread and all that kind of stuff. And I'm not talking about yield spread like points. I mean, yield spread as what the cost of capital is versus what's the rate on that note.
Yeah.
Right.
I wanted to cover this, but I didn't know if we were going to come into it. So go ahead.
Yeah. So plan, that's a whole nother game. And my mentor in the business told me, "Malcolm, understand the game we play, right? Our clients are in the property game.
Yep.
Okay. You, my friend, are in the paper game.
Yep.
Right. And here's how the paper game works." And then that was like a whole nother, discussion.
You got to know your place.
Yeah, you got to know the role, know the game you're playing. It's just not checkers, right? Mm-hmm. So when we got into doing that kind of paper, it was an institutional fund that had contacted me, okay, and they're raising their capital through pools of individual investors, accredited investors, and then later their pool got so big they also attracted institutional investors like BlackRock, as an example. Mm-hmm. And Blackstone, those type of companies, right? So there's some lenders that are funded with life insurance company money. Some are funded with pension funds. Some are fintech companies where you have these really small investors that are only putting in, 5,000-10,000, and they're pulling their dollars into a bigger fund. Then you have REITs, you have mortgage REITs, and they're getting into the commercial paper game.
Oh, nice.
And so how a lender is funded and where their investors' money comes from will dictate what level of risk they're willing to accept on a deal. So my investors, and as of right now, was in 2019, as of 2023, we have 3 multi-billion-dollar funds that fund my paper. Okay, so I don't borrow money from like Chase.
Yeah. You're
own it out.
Yeah.
I don't have like I don't have like a line of credit with your commercial bank on the corner. It doesn't. My funding is completely different than that. And that's why with banks are subject to Dodd-Frank.
Yep.
My funds are not.
Yep.
Right. They have to go through stress tests.
Yep.
And all of that fun stuff. Right. We don't have any of that situation. None of my funds are depository institutions that have to deal with any of those types of regulations. So we can afford to be a little more, I don't want to say aggressive, is not the right word, but we don't have some of those same restrictions. And we definitely don't have Uncle Sam looking over our shoulder. It's a matter of what was the risk tolerance that I promised our investors that I would not go above.
Yep.
Okay. And so I lend to their risk tolerance, and they expect a return.
Yep.
For that risk tolerance. And that's how the game is played. So sometimes it's, there's a book out, It's Not What, It's Who.
Who and how.
Right. And so with us, it's about who. Sometimes it's not that the loan is a bad loan or the deal's a bad deal. It's you're not talking to the right lender.
Ooh.
And what we do is we are still a lender and a broker. So if I can't do a loan, like for example, the RV park you were talking about earlier,
Yep.
right? RV parks are not an asset class that we would do internally. None of my funds would do that deal, but that's okay. I just take my lender hat off and I put my broker cap on. And then, I have other lenders that I work with, that I network with, and I ride shotgun over that deal and make sure it closes, but we're doing it with their money.
Nah, one thing I really want to hit on too is that you got to talk to the right lender for the right property.
Mm-hmm.
That was the key point. Maybe so far this whole conversation. That is huge. And one thing I really want to put on too is that there's always money for the right opportunity, and there's plenty of it. And that's the other thing.
Oh my God, yes.
And
absolutely.
What kind of things are you looking for when you're doing commercial loan? Are you looking at the deal per se? Are you looking at the person? Or are you looking at a combination of both? Because I think it's the underlying part too is a lot of people, they might have to have experience. Like you might have the best 800 credit score and $1 million in the bank, but if you've never done a commercial deal in this niche or strategy, you might not be approved. Or if you have a great deal that has enough equity or a great ROI that like, hey, we'll take a risk on you, but you have to put up this amount of money and it's on you now.
Right. It depends. Yeah. The short answer is it depends. The type of property, the type of loan, right? Whether you're looking for a bridge loan or you're looking for long-term financing, is there construction involved? All of those things will factor in. Also, but in general, probably 80% of the underwriting is the deal, is the property.
Amazing. Okay.
Only about 20% is on the borrower.
Okay.
So you think about like residential.
Yep.
You go to a mortgage a banker or your regular bank or whatever, you get a pre-approval, right? And the pre-approval states, okay, Dan, you're approved for a $500,000 mortgage, right? Based on your income, your credit, and all that stuff, right? Now go find a house. Any $500,000 house will do, right?
Yep.
In commercial, it's the opposite, right? I can approve a property. Like, let's say I've got a 40 unit multifamily, and based on the cash flow, the occupancy, right, the condition, the location, blah, 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 I can get that property approved for, a $4 million loan or $3 million, depending on, circumstances, right? Let's say $3-4 million bucks, and any investor will do. Mm-hmm. As long as that investor, where the property, like, I got to have an appraisal when you do your personal pre-approval.
Yep.
Right. When it comes to commercial, it's like any investor with minimum credit and maybe a minimum experience requirement, right, is going to get approved for that deal. So we will pre-qualify and pre-approve a property for financing. Like example, I've got a commercial realtor friend of mine. He just sent me a deal. It's like a $60 million apartment building. Okay. We approve it for financing with Fannie Mae and with HUD.
Yep.
Okay. It's two different options. Any investor will do. We don't. We'll work it out, especially like with HUD. I mean, they'll do anybody. I was almost anybody, but.
Okay, I have a question about this. So, if I have a question about terms. So I know it's going to depend, but like, is there like minimum terms you do, like 5-year terms? Because you don't want to fall into Freddie, so you can do long-term amortizations, you can do short-term balloons, you can do all this flexibility. Like, what's the minimum people can return? Because like some people might do like a 20-year am with a 5-year balloon or 3-year balloon.
Right.
Like what type of bridge loan debt can you get? Because a lot of people are adjusting to the marketplace, and your terms even now, you're probably being more favorable because you don't know if it's going to interest rates are going to go up or down. You're probably right. This is a good question for you.
Yeah, people are more, anybody who did a floating point, floating rate mortgage, screwed themselves. Right?
Exactly.
They should have went.
Can you explain what a floating rate mortgage is for the people that don't know?
Well, it's a mortgage where you're basically, think about a variable rate mortgage,
Yep.
right? Like an ARM. Okay, that rate adjusts based on 10-year treasuries. Which, by the way, for your listeners, 10-year treasuries is the benchmark of all lending. Okay, so if you look at if 10-year treasuries move up or down, so will the interest rates. Okay, and so if the Fed decides to stand pat on their rate increase, but 10-year treasuries go up, your rate's going to go up. Because there's nothing more safe than T-bills,
Okay.
right? Is the federal, it's the federal government. So everyone is measuring their paper against that level of risk. So if you think of a T-bill being no risk,
Yep.
right? And last I checked the other day, T-bill was like, 4.5%. Okay. Well, anything else is going to be riskier than that, right? Yep. So it's just a matter of how much. Is it like a margin of 300 basis points above that, or 2.25, or 500? You know what I'm saying? Everything is going to be measured against those 10-year treasuries. So, if I'm in a floating rate mortgage, my mortgage has gone up quite a bit over the last, obviously 3 years, especially the last 2, right? Yep. Now, if I was in a fixed rate mortgage, it wouldn't matter. If I did that fixed rate mortgage 5 years ago at 4.5%, I'm still sitting at 4.5. Now I'm gonna be nervous as I'll get out when my note comes due, right? But this is why I counsel people in those days. These rates are not normal. I've been saying that for like 10 years.
Yeah.
Okay. This rate environment is not normal. So I haven't done an adjustable rate mortgage in a long time, long time. Because I've been telling clients, listen, if you look, it's 4%, dude. Like, it's not worth the risk. The juice ain't worth the squeeze. Get that lower, lock in that lower rate. Trust me. Living through the great financial crisis, right? I remember I started in 2007, right? And seeing what happened in because commercial didn't really get pounded till like 2010. Okay. Yeah. Residential got blew up first. But seeing what people went through when their note was due and they had a balloon payment and now nobody's lending.
Yep.
Bank of America is not lending any money because the government made them buy Merrill Lynch, which financially was a dog, right? So they didn't have any extra capital to do lending. People with 800 credit scores couldn't finance a lawnmower. And now your notes are due, and the bank's like, listen, I don't care. Take us out. Well, nobody's lending. Well, I guess we don't take the property.
Mm-hmm. Lender's always secure.
Right. And people were like, man, I've been with this bank 30 years. I've never missed a payment. You're going to foreclose? Yes, they are. In that particular extreme situation, absolutely they did.
Okay, so I have a question, and I think I just lost it. I hate when that happens. Okay. Oh, I remember now. Okay, so one thing I love the transparency that you have as far as not doing adjustable rate mortgages, because in my head, were lenders or brokers getting incentivized to do adjustable rate mortgages? Like,
no.
They didn't offer. Like, you're like, no. Okay, did they have any other alternatives? They just didn't offer, or people were just getting them. Like, I don't understand that predicament.
People, I don't want to sound cynical, but just for a minute, just real quick, most people are lazy.
Okay.
So it's like, Daniel, what do you want? Well, I want this black case. Okay, here's this black case. Here you go. Well, actually, I got a gray one that probably looks better, wears better, but it costs the same as the black one. But I'm just going to give you, because I don't even want to. I'm too lazy to even have the conversation about which is better. Let me just give you what you want because it doesn't make a financial difference to me. And I always hated. I mean, I left. I started Castle Commercial Capital because of an argument that I had with my manager when I was doing residential mortgages over ARMs. Because I had a prison guard as a first-time home buyer who was making like $60,000 a year. And the guy, his realtor referred him to me to get him a mortgage. I put him in a FHA, I want to say $80,000 mortgage, that was fixed at some crazy low rate, which I think at the time, this is in 2006, was maybe like 5.25%, 5.5%, something like that, right? And my manager's like, well, Malcolm, you could have put him in an option arm and got that guy in a $300,000 mortgage. You could have made $5,000, $6,000. Like, what are you doing? You don't like money? And I was like, yeah, I get it, but it's his first house. He's single. He doesn't have a business. He's got no extra income. If that thing ever moves on him, he's screwed.
Yeah.
And so, and he, that was an appropriate size home for him.
Yeah.
Right. And aren't we supposed to do the right thing?
Yep.
For our clients? Okay. Oh, there you go, Malcolm. Talking about that do the right thing stuff again. I'm talking about making money. But if you don't want to make money, then, fine for you, and then, gave me gruff about it. Right. And then he was loud. Right. Then he was loud about it, like in the common area. So he's, teaching me a lesson, but really trying to do this for other people, blah, blah, blah. And I was having a conversation with my pastor that Sunday. And I was like, why is doing the right thing a badge of dishonor?
Yeah.
Right. And obviously we know now, Daniel, right? I would have screwed that guy. If I would have put him in that mortgage, that payment might have started at $800. But when all those things blew up, that thing would have jumped to like $4,000 and he would have been out of a house. And so I was like, there's enough money to be made. We don't have to do that kind of stuff. Yeah. And then my pastor said to me, well, Malcolm, if you're going to put the mortgage company together, if you're going to design one, what would it look like? I said, first thing it'd be commercial. Because commercial's about the math.
Yep.
I have to make money. And if I'm making money and I'm going to cover my note and my expenses and a profit margin, I'll do the deal. If it doesn't, I don't. I like that analytical side of the business.
Yeah.
Right. And he's like, well, how would you do it? Like, well, you set up an office, you lease some furniture, you'd have to establish some lender relationships, but here's how you go about doing that. You make some calls, blah, 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 Buddha bada bing, you get your brokerage. And he's like, okay, great, let's do it. I was like, what? Hey, I thought you were asking me hypothetical. He's like, no, we should do it. I was like, well, okay, but no disrespect, Pastor. I love you. You're my brother, and I trust you like more than anybody. But you don't know squat about mortgages. We're going to be a little unevenly yoked here as 50-50 partners, right? And he's like, yeah, you're right. You're absolutely right. And I don't want to mess up our relationship, because you know how it is. You get resentment if you're doing all the work and you're getting half the money.
Yep.
Right. And I was like, I don't want to, mess our relationship over that. And he's like, you're right. I tell you what, here's what we'll do. I'll fund it to set it up. And I'll be submissive in the sense that I'll let you teach me what I don't know. And I'll be humble enough to take your lead and we'll build it together. Oh, okay. And 2 months later, Castle Commercial Capital was set up.
Amazing. That's an amazing story. I love that, man. I love that. That's awesome. I didn't expect it to get that, but that's very, very interesting. What is where? Man, you threw me off for that one. That was a good one.
So that's why I don't like terms. And answering your earlier question about terms, bridge loans are meant to be temporary.
Yeah. And
where some people got in trouble the last few years is they were easy, because bridge loans are easy to qualify for and they're faster to close.
Yeah.
Than a conventional, traditional commercial mortgage. So folks weren't using them right. That's not what they were designed for. Bridge by definition means there's a problem that I need to bridge over until I can get qualified for traditional financing. That's what a bridge loan was made for. Okay. So that's what I recommend it useful. That's what I base my book, Financing the Unbankable Deal, on. Is here's all these problems, these unbankable deals that say, here's a copy of the book, by the way, that say, I can't get this deal done. No, you can get the deal done. You just can't do it with the bank.
Yeah.
It's a who, not what question, right? That deal's definitely, worth doing, and we know what to do. You just got to talk to the right person,
Okay.
and so we have a myriad, like my firm, we do bridge loans ourselves in-house,
Okay.
And but then we also broker bridge loans if the deal doesn't fit, again, within our credit box.
Yep.
Right.
What is your opinion based off
Mhm.
of interest rates and the future of commercial? Because office is dying, and multifamily cap rates they have shrunk to where it doesn't make sense.
Oh.
You're good. Multifamily cap rates have shrunk, and it might not make sense financing. What is your opinion on the market and where it's heading currently with interest rates, and what do you foresee as being coming up?
Well, that's an interesting question. I'm not a genie, and I don't play one on TV,
Yeah,
but
you got
I'd say this: the fundamentals are strong.
okay.
Okay, I don't believe in
The sky's falling.
conspiracy theories. I don't believe in the Illuminati controlling the the world. I don't believe none of that crap, right? Now, if you do, that's your bag. Okay. But you probably don't want to talk to me about it because I ain't that guy, right? I believe in fundamentals. There is a shortage of housing stock.
Yep.
By depending on what governmental entity numbers you believe, anywhere from 4 to 5 million units.
Yep.
We are short of demand. Okay. The cost of building right now is very high to, historically. So building multifamily doesn't make sense if you're a builder. It's too expensive. So I'm building high-end stuff, and I got enough customers buying high-end property that I'm not building $200,000 houses. I'm going to build 300,000 or not 300, but maybe, $400,000, $500,000 houses, or more, because I can, and I'll sell them. Right. Yeah. Are interest rates higher? Yes. Is the money more expensive? Can people afford less for their dollar? Yes. But you know what? Sales are still happening.
Yeah. There's enough demand.
Right. There's right demand. I'm in Southfield, Michigan. About 35 minutes west of me is Ann Arbor, right? Ann Arbor, Michigan, home of University of Michigan. Okay. I just saw their stats the other day. The average home sale in Ann Arbor is like $525,000.
Really?
Okay. Which is up 2% over last year. Average days on the market is like 21, 25 days, something like that. Okay. Which is like 15 days longer than a year ago. Okay. Well, guess what? Are rates substantially higher? Yes. And they're still selling those houses because Ann Arbor is a lovely community to raise a family, and if you can afford it, it is not an inexpensive community, right? But it's it's still a nice place. They got great restaurants. Of course, you got University of Michigan's influence, blah, blah, blah. People want to live there. So I don't know where rates are going to go. I just don't see a crash because demand is so high, inventory is so low, right? Incomes are up. Yes, is inflation up? Inflation was up 12 months ago, right? And this is where I'm an analytics stat guy. 12 months, the last 12 months from August to August, inflation's only up like 3.6%. Okay. And by historical norms, if you go back on a 50, 60-year average, inflation is right there at that like 3.8, 3.6% range. Okay. It's only the last, I want to say, 20 years that inflation has been down on average like 3. But that's not typical. Just like interest rates. These interest rates, oh my God, these interest rates ain't been normal in a long time. Me and my wife just had our 26th wedding anniversary, right? When we met, we were both realtors. And in 1989, we were at a company meeting for Real Estate One. They just crossed $1 billion in real estate sales for the first time. It was a record year, not only for them, but no real estate company had ever done, a brokerage, had ever done that much in real estate in Michigan. Okay, It was a banner year. And in that year, a 30-year fixed rate FHA mortgage was 9.75%.
Wow.
And at that meeting, they were like, yeah, let's go to $1.5 billion. Let's kill it. So rates are relative. They're relative.
Okay, I have a really hard question for you.
Mm-hmm.
And I have a varying opinion, but I want to hear yours. How do we, in very short, finite few sentences, how does it make sense to provide affordable housing? Because a lot of people want, like, there's an affordable housing like deficit, but it doesn't make sense in the capitalist country we have to make affordable housing. Because you even mentioned it earlier, there's buyers at the 500 price point in Ann Arbor. There's thousands of them. Why would builders build affordable housing? And is there a solution for it?
Well,
in your opinion,
in my opinion, no, because if it costs the guy, let's say $225, $240 to build a home that people want, like, and I'm not even talking about a high level house. I'm talking like a mid level
starter home, 3-2
house. His cost is going to be there. He's like, well, what? I don't make any money.
Yep.
Don't I get to make money? Well, if I'm making money, I got to sell that thing for at least $310.
Yep. It's not a charity.
At least, if not more.
Yep.
You know, so guess what? The government is going to have to step in and intervene. You know, because capitalism does not allow him to do that.
Yep.
On its own. You know, and you can debate whether or not, you know, the government should do whatever it wants to do. All I'm saying is, if you're going to have $200,000 houses or less, there's going to have to be some type of governmental support to say we're going to solve that problem. You know, it's like the other big problem you have with affordable housing right now too is the student loan debt.
Yep. Because
student loan debt exceeds mortgage debt on a national level. And when you got people graduating, one of my loan officers, his daughter graduated from UCLA. Okay. And, you know, $110,000, a student loan debt, that's a mortgage. The banker says, ma'am, you got a mortgage already. It's called University of California.
Mm-hmm.
Right? That she can't get out of. So, you know, she's going to be a renter for a long time. Because how are you going to pay $1,500 or $1,000, you know, $1,000 plus, right? Yep. Plus a month. And I'm going to get a mortgage? That to income ratio don't jive.
It don't matter.
So if you're a multifamily, right, that's good for you.
Yeah.
You know, if you're a flipper, that's why the rehab and the burr market for flips is going to be fantastic for a good solid 10 years, right? Because builders can't build affordable housing. So it's up to flippers to come in and take a house that they're buying for, like, I'll give you a deal I'm working on. They're buying it in Michigan for $100,000. They're putting another 100,000 into it. It's going to be worth like 320, 315 when they're done. And it's a fourplex. And they're going to get $1,100 a unit. That's $4,400 a month. It's $52,800 a year.
That's good.
You know, on a house where his cost all in is going to be $205. You know, because you got to add closing costs in there, so it'll be a little bit more than that. But you get my point, right?
Yeah.
He's putting about, the loan I'm doing. This is a first time flipper. Okay, so first time flipper from California,
Nice.
California, because he's taking $50,000 out of his pocket in California, buying a 4-unit in Michigan, right? And we got a team here. When I say a team, we got the realtor, we got the lender, that's me, we got the title company, the property management firm, we got the wholesaler, we got the whole caboodle. He's walking into a package where he's going to gross $52,000, which is more than his cash to close to buy the thing. Where he can't get that return in Texas or Florida or California. Not to sell Michigan, but my point is, from an affordable housing perspective, that's why flippers aren't going anywhere. They can't do enough deals, and guys like me have plenty of money for them in the marketplace that we're in.
What is a quote that's yours or somebody else's that you resonate with?
I got a couple real favorites from my book. One of them is the quote from John F. Kennedy, the moonshot quote, where he says, we're going to the moon in this decade and the other things, not because it's easy, but because it's hard. Right. And then the less famous end of that quote is he says, because it will get us to harness all of our energies and all of our skills to win.
Ooh.
And it's something that as a goal, we are unwilling to postpone, and we're ready to match and do whatever it takes. I mean, the other one is Michael Johnson, the Olympic sprinter. He said, they don't give you a gold medal for beating somebody. They give you a gold medal for beating everybody.
That's amazing. Plug your book, plug where people can find you. This has been an amazing episode. One of my favorites. I'm not being unbiased either. This has been a good one. I love this. Where can people find you? Plug your book one more time. Where can people find that?
My book is Financing the Bankable Deal: How to Buy Commercial Real Estate with the Bridge Loan Investor Success Strategy. You can find it on Amazon. You can also find it on my website, www.financingtheunbankabledeal.com. And then I'm on YouTube. So if you search Castle Commercial Capital, you'll find me on YouTube. I'm on LinkedIn. I'm on Facebook. I'm everywhere. And also we have a free mobile lending app, which I cannot endorse enough. With our mobile lending app, you take your phone out, you plug in numbers on the deal, multifamily, how many units, the location, what the purchase price is, and it'll tell you if the deal qualifies for financing without you having to chase down your broker or your banker, which is pretty awesome. It helps a big time saver. And you can find the Castle Commercial Capital app on the Google Play Store and also the Apple App Store.
There you go. Go check it out. Go check out the book. I'm going to go buy a copy today, and we're going to take care of that. But thanks for coming on, Malcolm. I really appreciate your time, and I really appreciate the knowledge and information. I hope this was a definitely different podcast than you normally do, but I think we had a great time.
Absolutely we did, Daniel. Thank you. I'm honored for being here. I appreciate you having me.
All right. For everybody here, go like, share, subscribe. You know what to do. Go share with a friend. And if you need a commercial loan, go check them out. Mac will take care of you. Have a good day, guys. We'll
Thank
see you
you.
next time.
Watch this YouTube video. We hope you found value. Please like, subscribe, and hit the bell. Watch more videos just like this one.